Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Good morning. Whoa, what happened to Dennis there? That's weird. Let's try that again with Dennis. Dennis, you're here, but you're not here. That's really strange. Well, we'll figure that out. Good morning, everybody. Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin. Dennis Dick is here, but his video is not showing up. That's super weird. Lot to discuss today. Reversals.
He's
right?
combing his hair.
Well, no, because he's not. Because I see him. When I bring him on, I don't see him. It's this weird. That's a weird thing. Dennis, try to leave and then come back in. Let's try that. Reversals was the theme of yesterday, right? We talked about it on the show. You've been saying for a couple of days now that growth seems a little overbought. Well,
Oversold.
Caught a bit yesterday. A lot of the stocks that have been punished had great days. And then on top of that, you had some earnings, like FUBO, which had a great day and then had great earnings and kept on going. So we'll talk about all that today on the show. Big day on the guest front. Michael Pachter is on at 8:35. He's from Wedbush, and he's going to break down EA's earnings from last night, the rest of the sector for us. He's a video game analyst, video game and tech analyst over at Wedbush. And then at 9, we're talking commodities, specifically agricultural commodities with Sal Gilbertie. He's the CEO of Teucrium Trading. They've got that's the firm behind the ETFs like corn and wheat and SOYB, soybeans and cane, and the entire space has seen a tremendous run, as frankly has every commodity under the sun. So we're going to talk ags at 9 o'clock with Sal. So good day for guests. Good day to talk reversals. Smash that like button. Let's get to 1,000 likes today. Let's get to 1,000 likes. That's going to be the goal for today's show. 1,000 likes. Joel, let's bring up your charts here, and you can tell us how we're doing in the pre-market session here.
Well, first of all, Triple D's internet went down.
Oh, that's what happened.
Yeah. And isn't there a new coin today? What's it called?
He just texted us saying his internet crashed. Yeah, there's a brand new coin. Dennis needs it, clearly. It's called Internet Computer, ICP. It debuted a couple of days ago, and it's got a $40 billion market cap already.
Wowzer. All right. Well, let's get to it. We're in the red by 12 handles at 34.25. Tried to rally off that 6 p.m. open, turned back at 50.50, and then we had a nice dip. Couldn't quite get to the low in yesterday's session of 03.75. Stopped at 10.25, and now we're just chopping around, kind of where we were in the last hour of the session. So I think a big day for the market. I think maybe it's one of these days where you maybe sit back and wait a little bit, see if I can get green on the session, take out the intraday high from yesterday, or if that low for the week holds from it's low for the week so far, 0375. Crude continuing to move higher with the pipeline still not back online yet. That's up 95 cents at 66.23. Let's call gold flat here, 1836. Still trying to clear 1850. Silver right between 27 and 28. That's down 12.2 cents at 27.55. And Bitcoin, wow, $2,000 range here from just hanging out, down $435 at 56,370. Look at the consolidation here in the Bitcoin futures. All right, so looks like the show must go. Oh, there he is. Hey, Triple D, what happened?
I did make it in. I don't know. The internet just went down. I haven't had an internet outage in a long time. Everything else was fine. I've had power outages, but the internet actually just went down for about 3 minutes. It's back, so I'm not sure what happened. My cable stayed on, but the internet went off. So weird. Anyways, we're back, so hopefully the internet does stay on, not just for the show's sake, but for my overnight trading account's sake, because I don't like it when I can't trade, especially when I have open orders and open positions, and it's never that much fun when your internet goes down. But we're back. We're back.
All right, what do you? I mean, it's just this is kind of like a teaser market, right? Because you had the reversal in a lot of the growth stocks. We're still red here, but well off the low for the week. I think this is a prove me day for the market, where where that was the dip was just the same old thing, buying the dip. And you bought the dip yesterday, you're rewarded. You bought the dip last night, you're rewarded.
In the growth names.
Yeah, I just don't know what to buy.
I'm looking here, and I love the price action in the growth names yesterday. We know I was leaning towards, selling the value names and buying the growth names. I've been doing that for the last few days, because value names have just been way overbought, and the growth names are way oversold. Obviously, they get hit harder yesterday. So I'm doing some homework last night, trying to go through some, growth names that I think might, be, they've come from, unreasonable cost to reasonable cost, growth at a reasonable price. And I'm struggling to find any. Even at these prices, I'm like, okay, yeah, the stocks look cheap here. But then when you look out to earnings, you're like, well, Airbnb, yeah, I love the concept. I love the company. I think Airbnb has a bright future. But then I'm looking, it's still trading 17 times sales. And, I'm just like, it's not cheap enough really from a value investor perspective. So I don't know what to do. I'd love to buy Airbnb here. But when I do the math and I crunch the numbers, it's not very cheap. So, and I don't want it, and obviously I don't expect it to get down to 30 times earnings to a market multiple, but I just don't want to be, they're projected out to make a buck. I mean, it's tough to pay 100 times earnings for companies. It's tough to pay 17 times sales. The growth is going to be there. They may eventually grow into that multiple, but man, you're still paying nosebleed prices, even though the stock's been taken down 80 points from the highs. If it fell another 80 points, it'd be like, okay, yeah, back up the truck. But I don't think you're going to get down to there. So, it's a tough market. As a growth at a reasonable price guy, which I am, I'm not seeing that much reasonable price in a lot of these stocks that really have been hammered. So, chat, help me out. Find me the nice growth company.
I got an idea.
What do you have?
No, I don't know what to do. I'm just, I've been nibbling at some boring old dividend stocks, and hopefully the interest rates and inflation won't, kick me in the butt. But where's our ETF expert, Spencer?
Moi?
We're going to bring in Spencer, and this is what Spencer is going to do live on the show. He's going to give us a growth ETF.
Oh, Jesus. You're gonna put me on
that, so we're not throwing darts at companies.
All priced at a reasonable price.
Yeah. He's going to give us an ETF, and all the components are going to be at a reasonable price, and then we're going to go in it, and that's going to be my next investment and opportunity. So, Spencer,
right now,
yeah, right now. Is there one?
Oh man,
a growth at a reasonable price ETF. There's got to be one of those out there. It's kind of the Qs. It's kind of the Qs because it's full of reasonable price Google, reasonable price Apple, reasonable price Microsoft, reasonable price Facebook. It's full of reasonable price. I still think Amazon's reasonably priced. It's kind of the Qs.
Wait,
and I own a lot of Qs.
I have one. I do have one potentially, and I want to see what the PE ratio 32. What about QQQJ?
There's an interesting one.
Which is like the Qs, but it's the next 100, right? It's not,
and it's trading 32 times.
Yeah, it's not the Nasdaq.
What's in the QQQJ? Because I've traded every once in a while, but I have no idea what's in it. Let's go look under. Let's go lift up the hood.
That's great. That's
the
his number one trading lesson. He doesn't know what it does or what's in it.
I'll tell you what's in it. All right.
Okay, what's in it?
Let's go.
Top holdings. Number 1 is CrowdStrike. All right. Number 2 is Roku. Number 3 is Fortinet.
You're not winning me over so far.
Hold on a second. This is top 3. Number 4 is Old Dominion Freight Line. Okay. We got Liberty Broadband. We got Garmin, AstraZeneca, Expedia, Tractor Supply. I'm not going in order anymore.
Oh my goodness, dude! So you see what they've done here?
Zscaler.
They put value stocks.
They put a few value stocks to bring the PE down. That's what they've done. Because the CrowdStrike Roku PEs are nosebleed. Garmin's probably nosebleed. So we'll throw some AstraZeneca and Tractor Supply in there. A little bit of Viacom, a little bit of a little bit of value in there just to help that PE multiple. So I don't like the way this is constructed whatsoever. One, this doesn't look. They're throwing non-tech stocks in with the techs. I don't know why the Qs want to do that. And yeah, let's make the PE reasonable. We'll throw some value stocks in there. I guess it's the barbell approach.
Sorry, guys. I was
all right. Rejected on that one.
Rejection button.
Well, that's what you get when you get 10 seconds of.
I'm sorry. I'm just trying to, because that way
we're throwing this to the chat.
Let's go chat. You guys need to
it's an
step it up a
emergency,
little bit.
but we're throwing it to the chat. Find growth at a reasonable price.
Twitter
trading
Twitter's
slightly
not growing.
Wait, chat.
It's not growing.
Chat does have a couple here. Chat's got a couple here.
What do we got?
We haven't talked about Salesforce much.
I had it once. I had it. I don't mind it down here at 210. I've had it in this level already. So I already played it once and it worked out well. I kind of like Salesforce. I like the pullback. I actually am a little bit long in the overnight account as well, full disclosure. I kind of like CRM. What else? Keep going.
Well, it's from Jean-Sebastien Desmarais. I bet you I nailed that pronunciation. Salesforce, he says Corsair, which I think you already own.
I already own Corsair. I did the homework on that one a while ago, and it is reasonably priced. It is a growth name, and it's kind of been thrown in there. But there's a reason I think Corsair didn't break down as hard as some of the other ones, because you're getting into a value area for it. So I almost think Corsair is almost a value stock at these prices. So I like Corsair. I'm long it. I have a full-size position in it. I've been in it for a while. I bought it at 40. Big mistake. It's at 32, so you can buy it $8 cheaper than me. That's one of the few that I held on to because I thought the price wasn't ridiculous. Next.
They're
looking like Pinterest and stuff. You know what the problem with Pinterest is? I asked my wife, how much are you using? She was on Pinterest nonstop. She's like, I go on there every once in a while, but everybody who's moved, it's like, what's the hot thing? And everybody goes on TikTok. My wife goes on TikTok. She used to be on Facebook. She hardly uses Facebook anymore. Then she's on Instagram. And my wife's a good candidate for this stuff because, she plays around on her phone at night when the kids go to bed. And I'm like, well, what are you using now? It's not Pinterest. And she was on Pinterest nonstop with the house and stuff, just pinning everything. But she's kind of done that now. So now she's totally moved on to TikTok. So I'm like, that harms Pinterest, and I don't know who uses Snapchat anymore, so I don't totally understand Snap at all. We use Twitter. Business people like Twitter. Sports people like Twitter. It's kind of a news
grow.
thing.
It just won't. I mean,
no, I know because it doesn't grow because the mass appeal doesn't get it. If you're not into sports, you're not into stocks. There is other things, but it's not like everybody gets the TikTok. It's just you sit there and you laugh. I mean, my wife sends me the videos. They are funny. There's a lot of funny stuff on TikTok.
There's a lot of not funny stuff there too.
Well, there's a lot of everything on TikTok.
There's a lot of ads
everywhere.
on there. There's a lot of ads.
But when you look at Twitter, you think, oh wow, 80 to 50. It is getting into that, cheaper. What's the earnings projections? Quickly go to Benzinga Pro Spencer in the background.
They guided lower.
That's the problem too. Is the growth isn't there? So you're going to pay 40, 50 times earnings for something that's not growing. I like growth if I'm paying 40 or 50 times earnings. I bet you're going to pay 40 or 50 times earnings for Twitter.
I don't know if they gave earnings, but they gave revenue guidance.
That doesn't help me. I like
doesn't help you. I know.
I mean, 38 cents, 16 cents. You look at the last few quarters, 37 cents. You can easily say this company can make a buck and a half. So if you threw a 30 multiple on that, which is a market multiple, you get a $40 stock. So you can see how it could be worth 40, 45. I think a 52. It would have gone to the value zone if it got down to 45. I think I'm probably going to wait on that. But what the moral of the story from yesterday, it was a nice reversal day for a lot of beaten down growth names. ARKK, the biggest indicator there. And obviously, I tweeted out right after the open.
Tweet.
It felt
Good
like
tweet.
I tweeted right after the open because I do the show and then I can't talk. And I'm like, okay, well, this felt like, they hammered these things so much on the open, it felt like capitulation. So I did do some buying in the overnight account and they were all good. I made money on them all. I had some Roblox I bought, RBLX.
Oh,
I think I picked that up
Bill's call. Bill's call.
Yeah, I said on the show I liked it. I think I bought it like $66. But then it runs and runs. And I'm like, okay, I'm already out of it. So that lasted a long time. It's 77. I mean, okay, well, that was a ridiculous candle. It not only got back some, it got back all of its losses. So Roblox was a great one. I bought that right after the open. I sold it way, way too soon, as I always do. But it was a nice quick scalp. And it was going to be on Mad Money, so that helped it as well. Once Jim said he was going to have that on too, I was buying right when the site was going to be on Mad Money, and it never looked back. But I like Roblox, but now it's at 77. Okay, it was just at 67. So that's
64.
out. Forget that. And the one thing too is people don't understand. If you're trading, I don't always have time to just go into my long-term account. It takes me time to go log into my long-term account. I'm doing trading. When it slows down, then I'll go do some of my long-term stuff. But my bread and butter has always been my trading. So I would have loved to put Roblox in my long-term accounts at $66 yesterday, but I didn't have time. I was too busy trading. It was a crazy day. So now, that the dust is settled, and I got a little bit of time. It's not crazy markets this morning. We're getting a little dip. I'm like, okay, well, what else can I buy? I was interested in Fastly because there was a huge under the radar. I don't have any position in it, so I can freely talk about it, but I did trade it yesterday off that 40 level, which is nice. One, it's not the nice bottom at 40, but there was a huge insider buy that just went totally under the radar yesterday. Look at FSLY. Bring it up. Morin Collin, I don't know who that is, bought 520,000 shares at $42. That's quick math. Is over $20 million. Somebody just put their money where their mouth is. I'm not sure if that's a director or who that is. It doesn't say director. I don't know who Morin Collin is, but somebody just bought $20 million worth of Fastly and that had an SEC filing at $42. So I'm like, okay, well, that's an insider buying there,
showing confidence in the company.
And I think that's why Fastly had a really big turnaround too. It never really went down much because that was from the night before. I was actually surprised that it was getting hit as hard as it was, and then it held the 40s. So good price action there. Is the stock cheap? To throw in your long-term account, I'm not sure about that. But as a swing trade, back and fill in here, you get down to 44, 43. I think you find buyers now because people are going to lean on that 40 level. So there is opportunities from trading. It's more I'm talking kind of what could I put in that that 40% that I got in cash right now that I'd like to deploy some of that. What kind of stocks? Give me some that
the $6 range doesn't look like anything on this chart.
No, I know it's been killed so bad. It was $120 in February. It's a 3-for-1 stock split, not a 2-for-1. A 3-for-1. That's a 3-for.
That's a big
stock split.
Wait, there's a few others from the chat that I want to.
What about Palantir? Does that still have a crazy?
I don't even understand what they do, so I'm not going to buy that one. Although it's beautiful candle, nice candle yesterday.
I just want to say because someone just asked about it here. You're bumping up against 21. You're trading, up nicely here. You're holding. You look like you're bid there. And I think, to me, I'd keep an eye on 2102. I mean, you had a high from 2 days ago at 2075, another high at 21. But if this thing could get 21 bid, hold 21, there's not much in the remainder of the 21 handle. So 2181 is your 5-day high. That's just a quick technical look at Palantir. We can look at it a little bit later.
Someone mentioned Lam Research, growth at a reasonable price. Maybe.
Chips, though, is it really is there that much growth there anymore? This stock, and let's give Lam Research the credit that it's due. This stock has been one of the best performers in the last decade. I mean, you go back to 2015, $75 stock. Now $592. It is cyclical too. chips are always cyclical. So you get fooled. I got fooled on Micron, remember? Back when I bought it at $60 like 2 years ago, that was at the top of the cycle. Then the cycle came down and the stock starts losing money again, the company. So, and then, obviously the cycle turns, but it cycles so much, those chips. So that's what the problem with all the chip stocks. You can get fooled and think and then they turn into value traps on you. So I'm not trying to poo-poo every idea here. I'm just like, this is the market we're in. It's still tough, even after a significant decline yesterday in a lot of names. It's still tough to find growth at a reasonable price. Most of the prices are not reasonable. So maybe it's going to take more time.
I'm giving you some more stuff from the chat, okay? Keith Trader is looking at Adobe and Autodesk. Says they both have sub 50 PEs. But again, these are just... they're
not growing like the other ones either.
Man, all right.
I know it's tough. Somebody's saying Fastly's still 15 times sales. Yeah, it's crazy. I like these I like some of these as trades. So I think you stop yourself out on yesterday's low. So if you're putting on any of these stocks, any of these names that we're giving you, I think you got to stop yourself out at yesterday's lows. I mean, Tesla too. I don't mind Tesla on the pullback here this morning. Kramer pumping it. Again, I still think Tesla, so these are trades, because I still think Tesla's eventually under a $400 stock. I'm not going off the record saying I'm bullish Tesla. But as a trade here, I go long Tesla, short Tesla every single day. I'm just scalping it and in and out. I think, if you're going long, you're leaning on yesterday's low 595. Maybe you get it back at 605. You give yourself a 10-point stop. Maybe you get a little relief pop. Maybe, it always punishes shorts, so maybe you can punish them a little bit more. There could be room to 650. But if it goes below the 595, all bets are off. So that really turned around yesterday, Tesla, when Jim Cramer on CNBC, it was 584, and Jim says, I'd buy Tesla right now. And it started going. I bought it when Jim said that. I bought it the exact same time Jim said that. I was like, I'm buying it because it's going to go up. And then it went up like $3 or $4. And I was like, oh, that was a good trade. And I look back 10 minutes later, it's up $14 from where Jim said that. Literally, Jim Cramer stopped that from going down yesterday. He said it right now. I see his exact words from yesterday at about 9:10 in the morning. He said, I would buy that right now. And
what about AMD?
It went from 584 to 594 in the next 10 minutes.
AMD, is that cheap?
Not really, no. Yeah. I liked it at 60. We talked it yesterday, but then I had the big candle reversal. Intel's cheap, though. I bought some Intel.
Somebody mentioned Intel. I want to give them credit.
I did buy some Intel. I'm early, though. I bought it at 56. I bought it 3-4 days ago because it had been leaking before this whole massacre in the tech stock started. But this is value tech. I like Intel here. I think Intel's not going away. I think, obviously, people are buying at $68. It got overdone. I like Intel here. I bought some Intel. I might even buy some more Intel, but it's a full-size position already. I don't really like him to go into double-size positions, so I like Intel here. Do you still have your Intel, Joel?
Yeah, I got it higher. I'm gonna buy some more eventually.
Never frown, average down. We took that from Joel Elconin.
A lot of people dropping coin in there. This is not a reasonable price, people.
No, and coin will not touch. A nice trade. I actually bought some coin. I was trading it yesterday, day trading it. It had some nice rallies. But and the candles look good. So, I'm not going to poo-poo you if you're long it right now. From a technical basis, it looks okay. Not touching it in my long-term account. Because, again, I think competition is going to come for them. Those spreads are going to tighten, and this is going to look relatively expensive when those spreads start to tighten. So I'm not interested in coin whatsoever. I think coin eventually is a lot lower. Right now, it looks pretty good, though, still. So, like I said, you can put any trade on. You don't have to like the fun. Trading is not about fundamentals. Trading is about momentum. Trading is about technicals. Trading is about reading the tape. Trading is not about putting your investing hat on. But I got 40% of my retirement account. I'm sure there's a lot of other people sitting with cash that are like, what can I buy? Because, we talk to two people. We talk to active traders on this show, and we talk to investors. Right now, I have the investing cap on. Find me growth at a reasonable price. I own Google. Like, some of these are good names. A lot of these I own. Intel. I think Intel still has some growth. I think the price is reasonable. I like Intel. I like Google. Google is maybe the biggest position in my long-term portfolio. So I'm not adding to it.
Yeah,
I still like Google though.
Don't worry, OP. We did not forget about CPI in 5 minutes. And we can also ask this of our guests here, but in 10 minutes. But what about EA or Take-Two or Activision?
I own Take-Two.
Oh, okay.
EA, they're saying that quarter was good, and I just didn't think it was as good. We're obviously going to have Michael Pachter on here in 10 minutes, so maybe we'll save some of these gaming questions for Michael.
Yeah.
We know he liked Zynga last time I was in the show. I'm going to ask about Zynga again to make sure he still likes it, because Zynga's so the two gaming stocks I have is Zynga and Take-Two. I sold my EA a while ago. I sold my Activision a while ago. Right? Activision, I got out of Activision early, like 88. It's 95, so that was a bad sale. And EA, I can't remember where I sold that. I bought it down like 110. I think I sold it in here somewhere, so I could probably re-get it close to where I bought it. I don't mind EA. I like the gaming stocks. I think there's growth there. I don't think gaming's going away. I'd be a buyer of pullbacks, but EA is getting a spike this morning. I don't buy spikes.
What
not in the investment account.
What about FUBO this morning? This thing,
okay, FUBO.
This thing just turned in an amazing quarter, and they raised their guidance on top of the day that they already had yesterday. It was already a good day for FUBO before the report came out.
The thing had just been so oversold. This is what you call a dead cat bounce. This was so oversold. It got down to $14 in the pre-market. Okay, if you're buying it at 21, you're buying it 50% higher in one day. It rallied 50% in 1.5 days from where it was. So as much as it was oversold, it just went to overbought. So that I'm looking at those highs, 22.63, 22.42. I think it puts a lid on it. I don't think it's going back to $30 today. It was way oversold. I mean, things can do anything, but I can't come in here and now buy it at 21.70. I actually had orders out there if it pulled back on the initial report. So I don't know if you have that chart, but it never pulled back even on the initial report. But I knew it was reporting. I had orders sitting out there because I figured if it sells off, it'll find buyers. And I had orders sitting out there $15, $16 in case they, reported not a great quarter. Then I was actually going to buy
on the cheap.
Yeah. And it went the other way, and I'm like, okay, I missed it. I moved on. So I had no trades on FUBO. Down at 14, 15, 16. Yes, I think I'd like it back because that's where I originally played. I should have bought it yesterday, hindsight capital's 2020, but I didn't look at it, and it was tough to buy yesterday on that open. Anything you bought on the open, growthy, you were immediately rewarded, but it was a tough open to buy because they were puking stocks out. There was some stocks opening down 10%. I had a short on Ring Central. RNG from the night before, and I got to cover this on the open. I knew I had to cover on the open. I put the aggressive order to cover at 255. I got filled at 250, so I got filled 5 points below my limit price on the opening print, and it went straight up since then. That just felt like I was like anything I had buy orders, I was getting filled way lower on the growth names than even what I was willing to pay. So that's how much it was a washout. You had a lot of stocks that were just opening down 5, 6, 7%. Some 10%. Some were opening down 10%. You had FUBO, for instance, too. It opened down significantly. I think FUBO opened down almost 15%. This was a washout.
Let's see where it opened. You gave a great number on the upside there. Let's see what did FUBO do on the. I mean, that's why those opens. Wow, 1483 open. 1464 low. I just looked. There weren't any monthly lows there. But you gave a really good number on the upside, Dennis. On that print, they took it up to 2267. And then Dennis is not getting fancy here. He's looking at the dailies. You see a high 2220, 2243, 2262. 2263, 2231. What that tells you is that on the way down, someone was really trying to unload at the 2250 area. We're stalling out here a little bit at 22. So if you're looking for 22, 23, 24, 25, multiple highs at that area reinforced by the after hours high.
I wonder if, Dennis, if you saw space, went from down 20% to green. Yes,
that's unreal.
Yeah.
Same thing. That's what you call capitulation, the washout open. Those are usually the buying opportunities. But
then you find, and this is what you're going to find in these things, like the people that picked this stuff up on the cheap yesterday
are flipping it out now.
They're flipping it out.
Yeah. Space gets up to 20. I mean, somebody just flipped that and bought that at 14. They just made themselves a tidy 30%. You got to be buying when you see that real blood, and we've been going, just quickly for the CPI, but we've been going like death by 1,000 cuts on a lot of these names. This was like the gash. This was like, okay, let them bleed out. And that's where you really buy. Like really, the smart money was buying growth on the open yesterday. And the smart money is honestly, and the stocks like FUBO, probably flipping it out already and making 50% of their money in a day. That is crazy.
15 seconds here.
Crazy good call.
15 seconds here to CPI. It should be a hot number. The estimates are at 3 points.
Should I go wide?
Maybe 3.6% increase year over year. If that were to happen, it'd be the biggest increase since September of 2011. But don't worry, it's all temporary.
Ruh-roh.
I'm scared.
Spiked it down. Oh, they don't like it. It must be hot. Hot number. Hot number coming out, folks.
Hot, diggity number.
Get out, Dennis, cancel bids. Every time I say that, it's time to put bids in there, just by the way. Wow. We just went to 07 and a quarter.
Whoa, what?
Oh, boy. Oh, here comes yesterday's low, 0375. We just hit, we ticked 0175. Oh, man. How hot is this number, Spencer?
All right, I'm canceling orders. That's too dangerous.
Now, okay.
Down goes Frazier.
Let's pull this into context.
I just literally pulled all my bids.
Oh, my God.
No more fills. No more fills.
Oh, no.
4.2%.
Oh, no, I went through my bottom number on my sheet. What am I going to do now? 95.5. Here's the bounce. Oh, my gosh.
There'll be a bounce. There always is.
Food and energy, 0.9 versus 0.3.
And I didn't have time to say this before. I'm talking 4.2% is comparing year over year. Okay, we're comparing April to April. Last April was like the bottom of a lot of stuff, right? Everyone was locked down. Okay, so the year over year comparison, that's why it was so high to begin with.
Holy
so 4.2% increase year over year is really, really high, but also the comps are going to be off here because last year was.
You know what? I'm gonna say a dirty word here. Stagflation.
Oh man.
We're going to have high inflation. We don't have high unemployment, but that jobs number wasn't good. And we're going to get some flat demand. That's a bad word. That's what they were thinking on when they hit it on that. We got inflation into a slowing economy. What is Jerome let me call Jerome right now and see what he's going to do, because this is not the number he wanted to see. These are not
the droids you're looking for.
What's interesting is that month over month, CPI rose 0.8%, which is above the 0.2% estimate. So, yeah, there's no saying that it wasn't a hot number, because it was a hot number. All right, higher than expected year over year, higher than expected month over month. Core, non-core, it was all higher than expected. The question now, and the Fed has said, we're okay with this, right? We're okay with higher inflation. B, because we think it's temporary, we think it's transitory. So those are the two questions we don't have the answers to yet, whether or not they're right. But yeah,
gold goes down. Gold is so far. I might get out of my gold today. I'm sick of it. And I look at that thing. Look at the bonds. Bonds are moving up here. This is the 1 minute. Wow, brick wallet 140 in the TLT. I don't know if we'll see that for a day or two. We got a bounce though. We cleared out the low from yesterday, and now we're on the rebound. But pretty good selling there. That big increase. Catching the street, but boy, we're getting some surprise numbers here. Friday and now today.
Yeah,
man, they got to start mixing that potion up a little bit different. But certainly, what the market did not want to see in this environment. Gold's getting hit. I see silver's getting hit too. A lot more red on the screen than we saw before. So 409,550, folks. There you go. That's your current low. Back over 4,100. Dennis, you okay there?
No, he's okay.
I'm okay, but I'm in a fast market for sure, Joel.
Okay, well, we got Pachter.
Wait a minute. He just said he pulled all his orders. How could he be in the?
I don't know if he did fast enough.
There was some interesting stuff.
All right, Dennis is gonna dig out of his hole if he can. And while he does that, I'm gonna bring on our first guest here. Michael Pachter is equity analyst at Wedbush Securities. Joins us periodically to talk about the gaming sector, technology sector. Michael, good morning. Thanks for joining us. How's it going?
Good morning. How old is Joel? I heard a reference to Ali Frazier and a reference to Jimmy Carter's stagflation. Were you like 2 when those things happened, if that?
I'm a little bit older than that. I'm probably up in your region.
I'm 65, so you're not even close. Go ahead.
No, not quite yet. I look 45, but I'm 57.
Oh, there you go. I look 57, but I'm 65. So there you go.
Yeah, some people, you can tell in the chat, some of those people catch those comments. But boy, oh boy, do we have an interesting market here, Michael. I mean, the growth it had its run. Value is so perhaps maybe overvalued. I know, your sector, the stocks, that you like to follow, the gaming stocks have had a nice run. Some of them pulled back. It's just, and I think I've been saying this for the last week and a half or 2 weeks. It's just a tough market, where to put your money. So let's just talk about first. Let's talk EA. They had earnings today, well off its all-time high, but kind of in the middle of nowhere. What was your take on the report and moving forward for EA?
There's a dynamic going on in the broader market that investors just don't understand what shelter-in-place meant and what shelter-in-place winners, are going to see a reversal. So we get, if you were buying hand sanitizer, we get that you're probably not going to buy as much once you're vaccinated. What people don't get is, there were big gains for the gaming companies because as people are sheltered in place, they have a couple hours a day of free time. They're not commuting, they're not grooming clearly. And so they just were spending their time entertaining themselves. And the more they consume, the more likely they are to spend money on games. So EA was a big winner. The disconnect is that so far we're seeing that a lot of these guys are hanging on to their gains. So EA surprised everybody. They guided much higher growth, for this coming year than anybody expected. They did 6.2 billion last year. They guided 7.3 billion this year. So they're growing off of a shelter-in-place year, and that's pretty impressive. They had a couple of acquisitions in there, which creates a lot of noise. They have new games coming out that they didn't have last year, so that's more noise. But bottom line is they're hanging on to the customers that they gained. We saw that yesterday from Roblox. I don't cover them, but same thing, that they did a little better than people thought. And they took the unusual step of announcing April month results just to let people know that when kids went back to school, they kept playing games. I'm not sure where they're doing it, but they're playing Roblox.
They're doing it in school.
Yeah, exactly. So the point, and Playtika, same thing. Playtika beat and raised guidance. So, which is all mobile casual games or casinos themed games. So the truth is that, these wins from consumers, converting their free time into entertainment, they've converted people into gamers. And, I think that the real big disconnect is we're not all headed back to work. Stagflation aside, your references to the 70s. I think this decade is going to see a shift of work habits. My employer just did a survey of all employees, and it wasn't, you shall return to work. It was, would you like to continue to work from home permanently? And if you want to come to the office, how frequently will you come? I think employers are resetting how they think about commercial real estate, how they think about their cost structure. It is far cheaper for my employer to have me work here. There's no liability insurance. There's no rent. There's no utilities. They can pay me more, and I'm happier. I don't have parking. My family, my wife and I went from 2 cars to 1 because I'm never going back to work. So I think that that's a permanent shift for any of these winners from shelter in place, because we're going to voluntarily shelter in place. And we've obviously picked up a lot of habits like buying everything on Amazon, including groceries. That's not going away. So the ones I like, the stock that I think is the most interesting out of all this, Overstock. They sell furniture. And somehow the market thought, oh gosh, because we were sheltered in place, we noticed that our couch and our coffee table were ratty and needed to be replaced. We were already home every day. We knew we had ratty furniture. It was not a shelter-in-place beneficiary. They're actually executing. So I love that one. with a blockchain side play, ancillary benefit.
Yeah, for the
there's tons to make money in this market. But I agree with your setup, Joel, that the valuations are getting a little frothy. They pulled back. Investors are now shifting to what they call value tech. So you're seeing some of the lesser valued stocks come up, some of the higher frothy stocks come down.
If I can go back to EA for a second, Michael,
Sure.
You said that you think that their own guidance is too conservative. Why? Or their own EPS guidance too conservative. Why?
To make it really simple, on an incremental dollar of revenue, if they grow revenue, they don't have any incremental G&A expense, and they don't have any incremental R&D expense. They expense R&D, so they're already creating the games. The only incremental expense is sales and marketing. So their gross margin is north of 70%, and sales and marketing is around 20%. So, if they generate 70% gross margin on incremental dollar and they spend 20 to get that sale, they have 50% contribution margin. If you do the math on 1.1 billion of growth times 50%, 550 million of operating profit growth, that's about $1.50, $1.75. And they got it to 40 cents of growth. So I'll give them some credit that they had some transaction costs for their acquisitions, 15 cents, but I have them growing $1. And I think I'm way light. I think the number is more like $1.25.
All right, and the last one on EA before we'll move on. So I'm looking ahead to the slate, which you mentioned already. We've got a new Battlefield franchise, not next year, but the year after.
This year.
This year.
Yeah. This fall.
We've got a new Apex Legends.
Same game. Yeah, they're just expanding it to mobile. Yes.
Right. Okay. Are those two? Is there run up to those two launches? Is that a thing? Are those both like short-term catalysts, or do you think not so much?
Yeah, no, they definitely are. And unfortunately, in entertainment, it works both ways. So if Battlefield is great, the stock will go up, and if it sucks, the stock will go down. Apex will be a little slower because you can't tell the first day of a mobile game launch. But if it has crazy downloads and crazy traction up the charts, then the stock will work. If it doesn't, the stock won't. I think Apex is going to work for sure. Battlefield's an open question.
Got it. Couple questions from the chat here. I don't know if you follow Huya, Huya. Do you follow that one?
Don't even know what they do. I couldn't have spelled it if you had spotted me 3 letters.
All right. And then I got a question for you about GameStop, which I don't believe you cover, but obviously.
I do.
You do cover? Okay.
Have we had you on since we have. Okay.
Yeah, we have. Yeah. Are you still at a sell or?
I am, and I've actually forgotten my price target. It's something like 40. No, it's hard to keep track. It's when they did their most recent capital raise, we actually added the proceeds to the cash balance. So I value it on an earnings multiple plus cash. I think it's 40, but if I'm off, it's 42. But I'm going to sell. Look, Ryan Cohen is an accomplished guy, and I am certain that he's got vast plans to turn the company around. The question is, are his plans half vast instead of vast? I mean, we'll find out. That's a play on words. If you say it quickly, you'll understand. I don't know. I mean, I think that the market's giving him credit that he's going to reinvent GameStop and he's going to get us all to buy everything there. And I'm not sure it's the same business as pet food where you have to buy more every week. And you can cross-sell people leashes and flea medicine and treats. So we'll see. But I think that the valuation is kind of crazy up here. And I know the believers think that shorts are really stupid and they'll keep coming back. Einstein's definition of insanity is to keep doing the same thing over and over again. Let's see which one is insane, the shorts or the Reddit raiders. And I'm going to bet the shorts figure this out before the Reddit raiders do.
Got to ask you about Unity as well. They had earnings out last night. And the earnings were good, and they raised the guidance, and you are bullish Unity, correct?
Love it. And let me say it here first. The reason people love Roblox is they created a platform for developers to create games, and then consumers came in and played a bunch of different games. Unity is Roblox times infinity, times a billion. Wow. Literally 60% of all games are created in Unity. So if Unity says, hey, we're going to be like Amazon, And if you publish your book digitally, we're going to create the Kindle store and everybody's going to buy their books here. Why can't Unity help every developer who makes a game put it on unity.com, and we're going to be just like Roblox, except we have PS5 graphics and Roblox has PS2 graphics. So your games are going to look better, they're going to play better, and we already have 60% of all games created in Unity. It's going to happen. And they didn't say that yesterday, so you're hearing it here first. They cryptically talked about something called the metaverse, which is something that Epic's been talking about with Fortnite and having concerts and stuff. Unity is so well positioned to eat Roblox's lunch. So if you think Roblox is worth in the 40 billion range and Unity's trading in the 20 billion range, flip those values. Unity is going to eat their lunch. I love them.
Wow.
Wow, that's a strong endorsement. Dennis is in the background. Busy,
I'm listening. I just take notes when Michael's talking. I just literally sit here and I take notes all the time. I just wrote you. I actually wrote it on my sheet here.
I got it started right here
because I'm looking for stocks. I'm like, this guy, Michael Pachter, does his homework. You gave me. I remember which one was it? King. Remember King back in the day? You gave us.
That was a long time ago.
And you said on our show, it was like 6 or 7 years ago, you're like, I almost want to stop covering the stock just so I can buy it. And I'm like, I'm going to find King right now. And it got taken over like a year later. So there you go. It's Michael Pachter does his homework.
You want to ask him about Zynga here.
I've still got your Zynga. Are you still bullish Zynga?
I am. And, it's another one. That's another one that traded flat out of great numbers. They're hanging on to their gains. Management seems to actually be doing everything right. And, I think it's just that they're thrown in that bucket of COVID winners that we have to sell. So the stock hasn't dropped. I mean, I think it's down like 2% since the print. But really good numbers, growing EBITDA like crazy. And the thing that's cool about them is that they're deliberate in their spending. They're growing because they added a bunch of stuff. They launched a new game in April. They launched a game last October. So they're building those two. They have another one launching next month. And they have something launching in the back part of the year. So they're going to spend a little more than normal this year, which is keeping their earnings down. Next year, everything clicks. So I'd say by this time next year, that stock is well into the mid-teens, probably 15, 16. You can get it at 10.65 if you've got a year of patience. You make 40, 50%. Like it a lot.
I like that.
All right. Michael Pachter is a senior equity analyst at Wedbush Securities. Very bullish some stocks, very bearish other stocks, and he's got strong opinions, and we love him for it. Michael, thank you so much for joining us. As always, great insights on Unity, on EA. We'll definitely have you back on again.
And bet on Ali over Frazier.
Okay, thank you.
I was a big Joe Frazier
bet
fan.
Against Jimmy Carter. Okay?
I was the only kid in my second or third grade class that was cheering for Joe Frazier.
There you go.
I was. Down go Frazier. All right, Michael, that was great. I really appreciate it. Great insight, and we'll get you back on again soon. It's been too long.
All right, Joel. Thank you.
All right, we rebounded, Dennis. We were able to scratch.
I was trying to buy the dip.
That was quick.
It was quick, you know what? And because everything was moving so quickly, I'm like, I never even had a chance to analyze the number. You can see the complete separation here now. So assuming hot number, let's go talk the number here one more time. I'm assuming pretty hot number.
Yeah, month over month, which I think is a bit more of a fair comparison. 0.8% versus the 0.2% estimate year over year, which I mentioned is kind of going to be screwy because last year was crazy. But 4.2% year over year increase in CPI versus
this is the rigged CPI number too, by the way, where they take out everything inflationary, and it's even showing inflation now.
Yeah, so CPI, if you don't know, it's a basket of, I think it's like 80,000 goods that they have in the basket that they just measure the price of. I think it's 80,000, and
they put it all like, I don't know if it's actually, I don't know if anybody really totally knows the way that they calculate, but there is a number of goods. A lot of it is equally weighted. Like I've argued before, you got a television getting the same weight as something else. So TV prices go down, but lumber goes up. I mean, and then there's other things that are just taken right out of the index altogether, which is why the index is so screwy. But anyways, we're even seeing inflation in the CPI now.
Right.
So you have inflation everywhere.
So
there
there's
is
two numbers.
inflation everywhere.
There's two numbers. There's CPI and there's core CPI. Core CPI core CPI is just CPI, but without food and energy, so gas. So no food and gas in the
without everything we use.
What? Okay, sure.
Shelter, food, gas, transportation, the basic needs of life. That's what the core CPI likes to take out. The basic needs of life. It makes a hell of a lot of sense, folks.
Hey, I'm not an economist.
Housing. That there's no.
There's no need for shelter. There's no need for food. There's no need for gas. Why would we have that in our index? That's how much a joke it is. But okay. But I mean, even the joke index is showing a hot number here. So what does that mean? Banks ripping this morning. We got oil ripping this morning. So banks completely turned around. The banks were getting hit this morning. They've completely turned around. You got Goldman Sachs trading up $3.50 here now. Bank of America trading up 1.5%. Citigroup up over 1%. JP Morgan up almost 1%. So the market that's getting in the beats, there is rotation always happening here. Obviously, if we get the inflation numbers hot, that's going to push for higher rates, which the banks want. So it's logic wins again. The banks actually did dip on the initial number, but Slow Denny here was doing a lot of things. I was trying to actually buy some energy. I bought some XLE on the pullback at 52. But, you're trying to go as fast as you can. You're trying to process quickly. And it's just, I wish I was a computer, I guess. I should just probably algorithm all. I should.
It does as
Dennis, you could have put your traders, what you do and the exotic hedges and some of the stuff that you do. I don't know if
it's a reason why the human being is still superior to the algorithm. So if you will see, and we have a number of traders, really good ones in Bright Trading. We got like 100 traders in the firm. There's 20 or 30 traders in Bright Trading that are just phenomenal traders. And they do use some algorithms, and I use some algorithms too to help. It searches me ideas. I used to use it for execution. I don't use them so much for execution anymore, although I do use some algorithmic help too. But still, those brains, the trader brains that are just seasoned, can always think one step ahead of the bots, because when the rotation turns, they identify it. And if you've got a quant and they've got they're just running algorithmic trading, the rotation turns, they got to reprogram that all. And then they tell the programmers, okay, well, we need this done, and then it's a week later and finally they've got it. And, they start to employ it a little bit. Well, we were already extracting alpha from that for the last week. And maybe the rotation's going to turn again all of a sudden. So there are always opportunities for the human being that understands relationships. Remember, I'm all about relationships. I know when you get a hot CPI number like that, it is going to be good for the banks. I mean, there's just people that are just selling stocks just because they're selling stocks on that. That was not the call. If you look, bring it up. It's actually good. It's a good, right on the 330 number, bring up, the initial on Bank of America. You can't see it there, but they actually hit it. In the first few seconds, the bots, because they hit everything, stupid program, hits everything because IWM and SPY is going down. So they just automatically hit everything. And then, whoa, and then they turn around and they start buying them. But you can actually see even the XLE, bring up the XLE on the initial number. It got hit. I got executed. I bought some XLE at 52. And then now it's 52.64. I'm out of it. I was actually short XLE, so it was a cover. But you can see, boom, the initial hit. Well, that didn't make sense. We got energy, and it's getting a lift here now too. So there's certain things that when they just, the sell program hits sell everything, some of it isn't a sell. And the smart traders are picking up that stuff that probably shouldn't be sold on a hot CPI number, especially the banks. The banks are the obvious one.
Yeah, getting a little pop here.
That's nothing to do with technicals. You see how all that trade, like this is why 90% of the people out there are using technicals. They're looking at charts. They're trying to tell you different things. Which at Bright Trading, the majority of our traders are talking about relationships. Nobody talks about this stuff because you know why? It takes homework to understand this stuff. People don't want. They can easily look at a chart. Oh, I get that. It's trending up, trending down. It's simple strategies. You put a little bit more advanced stuff in there, though, alpha generation goes way up. There's a reason those 20, 30 guys in Bright Trading make money every month. There's a reason that they're so bloody consistent, because they understand those relationships. They understand, what it means. And, you've got to understand that the majority of money, you think Citadel and all your major high frequency trading firms are making money because they like the chart. I can pretty much guarantee you that Citadel probably uses very little charts. probably I'm not with Citadel, but they probably don't use much charts at all. Not to make their trading decisions. A lot of theirs is market making, where they're just making the spread. I think a good bulk of the money that they're making is market making. But there's also the quantitative approach, where you're understanding the relationships. This happens. This means this. And the smart programs are coming in and buying banks on a hot CPI number. And there was an opportunity. It didn't last more than a minute, but there was an opportunity there to get long banks on that hot CPI number.
Isn't it that story from Jim Simons, who runs Renaissance, like decades ago? Like, he was asked like for some examples of like reasons behind their success, because it's all computers, and he like named like a stock that wasn't even like out there anymore because it gotten taken over, but he didn't even know that, because the point was it doesn't matter. Like, it was all just computers trading off relationships.
Yeah, relationships make money.
He didn't even know like the stock wasn't even like a stock anymore.
And you know what? And I'm probably the same thing. You know, I get to a point, remember, where I get so busy with my trading, I had a stock taken over in my long-term portfolio. It got taken over. It was a smaller cap name. And I didn't even notice till 2 weeks later. I was like, holy crap, I'm up 50%. And I'm like, what happened there? I look back, I got taken over 2 weeks ago. And I didn't even know that. I got so tied up with my own trading, I didn't even notice that I had stock taken over in my long-term portfolio. But I don't log into my long-term portfolio every day because I don't want to trade it. Yeah. But yeah, you're talking about Jim Simons. You're talking about, hey, look, here's an advertisement for him right here. Look what I got sitting here.
Oh.
The man who solved the market, Jim Simons.
Yeah, did you read that yet? I gave it to you.
No, I know I flipped through it, but I need to read it.
That's a good read. It's a vacation. It's a vacation.
I do need to read it, but I mean, I'm all about the quantitative approach to the markets. I'm basically a quant.
Never figured out who sent that to us.
A human quant, though, not so much an algorithmic quant.
I never figured out who sent that to us. It was an anonymous person, and I wanted to thank them. It came forward. We got a bounce to mid-range there at 42.23. Now we're turning another leg lower. Mike K was asking about, do I think that the S&P can go down to, 4,000? And I'll pull up the cash here. And this is the difficult thing here. If we could fall a long ways in the market and still be in a really bullish uptrend. I mean, and that's the thing. And that's why I'm, hesitant putting, money to work at these levels, because, I mean, look at that run from 38.50 to 42.50. I mean, and that's just since the end of March. So, yeah, I mean, we read 4,000. Yeah, we go down to 4,000, and you couldn't even consider that. That would be a little bit of a pullback. So I like to do my numbers, my analysis on, more on a weekly basis. And we hurt last week's low yesterday. I mean, we happened to get some 30, 40, 50-point rips off the bottom. We had a new low. We took out the low from yesterday, and we're way below my weekly number. So, yeah, 4,000 could definitely go there. But the question is it a bargain, another 150 handles from here? That's going to be the question.
All right. I said at the top of the show that my goal was 1,000 likes for.
Not doing good.
Not there yet, but we have time.
I'll like you. I'm going to help the cause right now. Look, I just helped you.
Thank you. Let's get to 1,000 likes. And on that note, Benzinga's YouTube is nearing 1,000 subscribers. Sorry, 1,000? What did I say? 100,000 subscribers.
I was going to say, that's not very good, 1,000
100,000. We are on the doorstep of 100,000 subscribers to our YouTube channel. We have a very special giveaway plan. I'm not going to say exactly what it will be, but it does involve giving away a free stock. I'm not going to tell you what stock.
For the 100,000th subscriber?
We're doing a contest, and it will be awarded after we cross the threshold. You will have to enter. It's not live yet. I'm just teasing it. It's going to go live on Monday.
What if you get the 100,000 subscriber today because you just said that?
Then
you're gonna have to work fast.
I don't know. We're at 94 and change right now. So we are having a contest next week for the 100,000 subscriber celebration. We're going to give away stock. We're going to give away some other stuff, and we're going to pour something on Jason's
and
head.
You know where we picked up a majority of those subs from the financial crisis. not the financial crisis. I'm not thinking, the pandemic. I mean, I think that's where, because when the market's going up and up and up and up, everyone's a genius, right? Everyone can buy and sell. Everyone. But when you get into these kind of environments where the market's actually going down, it's a lot more difficult. And maybe we don't talk about the cryptos and all the things that the hot things. What we're talking about is consistent trends and ways to navigate yourself out of these kind of environments. So hopefully we're not hitting the environment that we did back in last March and April, but definitely a little bit more rocky road here.
And then before I forget to mention this, on SPACs Pack today, they're talking to the CEO of Carlots, LOTZ. That's at 11:15 today. I want to plug that because I saw on the calendar and I was up on the screen earlier, and I want to plug it again. LOTZ will be on the stream at 11:15. There it is. All right, Dennis and Joel, any final thoughts for the day before I bring on our next guest?
I still like to buy some of the growth names on the dip. You're getting a significant dip on most of those growth names that had a pretty good day yesterday. ARK getting hit here on the hot number. I think you get down near yesterday's lows on anything, and I'm trying to buy on the dip. Tesla's right there right now. So if you're looking at Tesla, it's interesting. It's trading right near yesterday's low, 601, so 595, just below the 600. I think you're going to find support there. So if I'm looking at the growth names, I'm looking at yesterday's lows across the board. Obviously, on a FUBO, it's not going to come into play. But on some of these names, like Tesla, it is coming into play. So I think you're looking at yesterday's lows, and you're maybe trying them for trades there. Take out yesterday's lows, you stop yourself out. You give yourself a little bit of room. Don't do to the penny. But, and roughly speaking, that's where I'm looking at buying the dip, is on some of those growth names at yesterday's lows. Just for
and I'll give you the flip side here. If you took some stuff home overnight and you caught the bounce yesterday, you're looking good. Yeah, I don't think you're gonna be gapping down through a lot of lows in this stock, but I wouldn't get too giddy on the upside of some of this stuff until the stock at least goes green. And if it's trading below that close, for example, Microsoft traded down $1.90 here. I mean, anywhere near 126. Look at the mark. I mean, with the indecision that you had yesterday, right, and now the nervousness in the market now, if people that bought the dip yesterday that thought they got the whole enchilada, a little different today. So just keep an eye on those closing price for the mark. Don't get
there's a lot of, I'm just going through some of the growth names. People are asking about what growth names in yesterday's low. I just saw Tesla, but there is a lot of growth names that are approaching yesterday's lows. I mean, Apple is approaching yesterday's low, and Apple's not a growth name, but I'd say I'm just putting it to tech altogether. Let's see what they do at yesterday's lows. These are just setups, folks. They don't always work. If something worked 100% of the time, we'd all be rich. So it's just setups and probabilities. But a lot of times you'll see support at the previous day's lows, especially after a big reversal day like that. So here's where a strategy where I am using the charts. I'm going and looking at yesterday's lows and thinking, I'll take a shot there. If it works out, it works out. If it's not, I have myself an out. I have myself defined risk. And that's what me and Joel have always been about. It's defining your risk before you enter the trade. Never think about enter a trade. Think about how much money you can make. Think about how much money you can lose. And then that'll protect your capital.
All right, let's talk commodities here. I want to bring on Sal Gilbertie from Teucrium Trading. Joel, we'll see you later.
Okay.
Sal, first off, good morning. Thanks for joining me.
Good morning. It's a pleasure. Thanks for having me.
What do you say to someone who's looking at, I'm going to bring up a chart now of one of your ETFs, corn, okay? What do you say to someone who is just now noticing something like corn or wheat or soybeans and seeing the run and getting interested now? What would you say to that person?
Well, I'd say I'm glad you're here and you've finally noticed commodities and particularly grains. You've probably missed the big leg. You've definitely missed the big leg up. Grains are interesting in that they all farmers are subsidized around the world, and so they're used to operating at break even. And when you look at long-term continuation charts of grains and ags, in particular grains, they trade at their break even, and then when it stops raining, because nobody skips their bagel in New York when it doesn't rain in Kansas. They go out and still get their bagel, and so you see these grains explode higher, and you've missed that big initial move. That said, now you've got to be careful. and buy the dips. And the reason for that is if you want to be long, you're looking for dips. The reason for that is you're at really elevated levels. Grains you're coming into a time period where you can often see a seasonal top in grains between now and say the beginning of July, and that has to do with the growing season in the northern hemisphere. So you pulled up corn. I see your soybeans up, our soybean funds up there now. You got to watch these things carefully, but the global balance sheet of grains, meaning the supplies left over after you grow a crop in 1 year. It's cosmic. You plant a seed in the spring, it grows all summer, you harvest it in the autumn, and winter nothing's growing. So that's how it works. So what you harvest has to last 1 year. It has to last through the winter, through planting, through growing, through the next harvest. And when you figure out how much you've grown and have in a big pile, and then how much you're going to use for the next year until you can add to that pile, what's left over is a little bit. And what's happened is, using soybean as an example, since it's on the screen, you're normally used to about 40 days supply left over in the United States. We're down to under 10 days supply predicted right now. And so people are nervous because nobody's going to stop using soybeans. You're not going to stop eating. You're not going to stop feeding your animals. You're not going to stop using the fuels. And so what happens if there's not perfect weather next year? So it's basically a weather bet, because the combined use of grains, corn, soybeans, and wheat in particular, goes up every single year since 1960. We've looked back since 1960. Every single year, the combined global use of corn, soybeans, and wheat is either a record or it just misses. So it's the second highest ever in history. And that happens every single year because the population of the world is growing and the global economy is growing. And so you want to layer in grains when they're at break even. You've missed that now because we've drawn down the balance sheet. So now you want to pick your spots. You want to be careful, but grains are likely going to remain elevated through next year. We have a big government report coming out today, and it's projected to show that even through this growing season, and again, we're just planting those seeds now, so we're assuming perfect weather and trendline yields, that in the autumn, when we harvest, the grain that has to last us through next autumn, in 2022, that's not going to be enough to replenish us back to what we were used to just a year or two ago. And that's why we've seen these rallies. So you've rallied, you're at elevated levels. You will likely remain at elevated levels. Be cautious in your acquisition of grains right now. I'd be looking for dips to accumulate if you're on the buy side.
So remaining at elevated levels until the next harvest, which is the fall. Is that what you're saying?
Well, okay. So this coming fall, you generally have a seasonal low in the autumn. So with corn in particular, you generally get a seasonal low on spot corn prices in the first week of October. That's prime northern hemisphere harvest. But this year, even with the harvest predicted that we're expecting, we do not expect corn inventories to increase. We actually expect them to decrease a little bit from last year. And so we're likely to remain elevated until the harvest that occurs in 2022. That said, it could rain. It's not raining in Brazil right now. That's why you've seen corn take that extra leg up in the last week here on the chart. Brazil is the world's second largest exporter of corn, and they're not getting rain that they really need badly right now. And so that's a bit of a problem. If it rains there, you could see a pullback. But remember, the pullback is going to be because of the Brazilian rains this year. But even if we get good rains and perfect growing season in the entire northern hemisphere, which is just being planted now, you're not going to have the amount of corn left over that you had a year ago, which means the balance sheet's going to stay tight through a year from this autumn until we can see that crop come in. So, I think people need to look at this chart and not expect a pullback back to, say, the 2020 lows or the 2019 lows. That's going to be very unlikely, if not completely improbable, for a good year, maybe longer.
So not expecting a pullback. I guess there's a difference here because the chart now can only go up, down, or sideways. So
right.
You're saying not necessarily going to go up, not necessarily going to go down. So you're saying going to remain at these levels.
I think you're right now you're at an extremely elevated level. It would not surprise me to see a pullback over the next several weeks or month, but that pullback is not going to be anywhere near the lows we've seen in the last year because the fundamentals don't support it. So if that does happen, it will be an aberration.
Well, and yet you're talking about everything from a fundamental standpoint, but we haven't even considered like the speculatory aspect. Is that a word, speculatory? I don't know. I just made that up.
We'll go with it. Yeah, it's okay.
Speculation aspect of this, and I don't even know if we're factoring that into the equation yet.
I think, well, certainly hedge funds, because the data is, you have to report. So the commodities rules are unique. So futures markets have to report who's holding what, long and short positions, what category of people. And hedge funds and speculators are holding record long positions right now across the grain. So that's another thing. If the sentiment turns, even if some of those people liquidate, you could see a significant pullback here. Many fundamentalists are viewing that as a buying opportunity, because it's just unlikely that we're going to return back to the comfortable inventory levels that we had, again, only a year ago, which means we likely won't return to the prices we had a year ago anytime soon.
Are agricultural plays like corn and wheat and SOYB and tags, are these hedges against inflation? We just got a pretty hot number.
Definitely. They definitely are. They're the cause of inflation. Commodities are the cause of a lot of inflation besides wage increases. Energy is probably the number one commodity cause of inflation, but you're seeing the commodity spectrum, everything except gold, go up of late. And so that's going to fuel more inflationary pressure to the upside, and commodities over time are proven statistically to be a good inflation hedge, or an effective inflation hedge.
You briefly mentioned the report, the World Agricultural Supply and Demand report that is, I guess, due out today. What are the expectations for that?
The expectations for that are to confirm the tightness that they showed last month, which again caused this extra leg up that we've seen here in the grains. And this year we get the first glimpse of basically what the stocks will be through the 2021-22 season, which is the seeds going in the ground now, be harvested in the autumn, that then have to last us through next autumn. So we get the first glimpse of that. That's expected to again, that's my point. They're expected to show those inventories are going to remain tight. We should show a marginal growth in corn inventories from this year to next year. We should show a marginal growth in soybean inventories. But again, just for example, soybeans have less than 10 days supply. We're used to 40. We may, some private analysts are saying the forecast today may show next year's supply will go up to 16 days. Okay, big deal. We're used to 40 days. So that's what I mean about the balance sheet staying tight and grain prices likely remaining elevated for an extended period of time here, meaning another year or so.
Can you speak a little bit to the construction of these ETFs? So do they just hold front month futures of commodities or what?
Sure. We designed these 10 years ago, 11 years ago, and to not just hold front month. So they're not designed to track the front month. They hold second month futures, third month futures, and then an anchor month, which is often can be more than a year out the curve. And the reason we did that was, one, people like to track the spot. They want to see that when spot corn's going up, that your corn fund's going up as well. Right. So if you hold the second and third month, you will correlate with the spot a little better. And then holding that anchor month, this is for people who can see a trend coming and want to hold an ETF for, say, 6 months or a year or longer. For those people, holding that anchor month is really important. You want to be, that's out the curve, okay? So out the futures curve, the only people playing out the futures curve are people who belong in it, producers and buy-side hedgers, and really smart, hedge fund people like that. Right. You want to have your money out the curve with the people who are looking at the curve. And so we put that across the spectrum. Our holdings are designed to not track spot, but give you, if second month, third month, and the December following third month, which is our corn month benchmark, if they go up, the corn fund will go up. If they go down, the corn fund will go down. Directionally, we will be moving with those 3 futures contracts month. Yeah. People can see that on the website. All ETFs, we're not unique in this. All ETFs must post their holdings within 24 hours. We post them same day. We have a formulaic long-only benchmark. So if $1 million comes in, we buy $1 million of those specific corn futures contracts. We post it on our website. You can see it. If $1 million goes out, we sell them. You can see our holdings. You know what we're going to do today, a year from now, 10 years from now. So it's a very predictable vehicle and transparent vehicle that you can use if you have a directional view on corn. We design these things, and they're the only products out there. They're the only ETFs out there. But for instance, in oil ETFs, there are oil ETFs that only hold, nobody really holds the front month for any time period. They've all gone into the second month now.
Well,
those are really good for short-term trading. If you have a 1 day to 6 week time horizon, that's terrific to hold the short-term ETF like that. But if you have a longer than, say, a 4 or 6 week time horizon, you don't want to hold an ETF that's only holding front month. You want to hold an ETF that spreads its holdings out, so you don't have all the messiness of rolling and things like that.
Well, yeah, let's get into that for a second. So for people who don't know, what are the unique risks associated with an ETF that holds futures versus an ETF that just holds like straight equities, right? Because we saw some really crazy things happen last year with the USO when oil went negative, and they had to basically change the rules for the fund on the fly as far as how far out the curve that they went. So what are the unique risks associated with funds like yours that hold futures and not equities?
Sure. Well, futures and equities are two different things. And remember that, equities, you're taking the money, you're buying stocks, you don't have any money in there.
Right.
Futures, you only have to put 5% down to control a dollar. And so if $1 million comes into our fund, we 50,000 or so goes into buying $1 million worth of corn. The rest of it just goes into short-term interest-bearing instruments, and that money accrues to the fund. It offsets expenses and helps accrue expenses. And so, but what happens is futures contracts, nobody wants to get a truckload of corn delivered into their front yard. And that's not the purpose of this. The purpose of these vehicles is to allow people to participate in the price movement, not to actually get corn. And so we buy futures, but we sell those futures before they become spot, before they go to delivery. And it's very simple, okay? The best analogy is between a gold ETF and, say, a grain ETF. Gold, $1,500 worth of gold is about as big as a half dollar. And there's deca millions and billions of dollars worth of gold can be stored literally in one room with a guy with a gun standing outside. It's really easy to store that. It doesn't cost anything to store it and protect it. So there's no cost associated with holding that gold. In corn, it costs 5 cents a month a bushel to store corn. And that's reflected in the futures price. So if I buy corn at $5 a bushel, if I hold it for a year, at the end of the year, that corn better be worth $5.65. $5.60, because I've paid 60 cents in storage costs for that year. And that's with any commodity. Oil's got storage costs. Any commodity has storage costs. And so the futures reflect that, and that's why people are confused about spot tracking. And you cannot expect to buy something and hold it for a year and there not be a cost associated with that. Those costs are very expensive with physical commodities because it costs to hold them. And that's what's reflected in futures. There's something called rolling, contango, and backwardation. Probably too much to get into right here.
Well, no, not necessarily. Go into a little bit.
Okay, sure. So contango is a cost of carry. So if I pay $5 for a bushel of corn today, that bushel of corn, like I say, will cost me a nickel a month to hold it for a year. Well, if I buy the spot month futures contract today, which there's a May futures contract in corn. So if I buy May corn today, that futures contract will expire in a couple of days. I'm going to take delivery of that corn and hold it for a year, and that corn will cost me $5.60, okay, a year from now. Now, unless spot corn goes up to $5.60, I've lost money.
Right.
I've lost money. But when I bought it, corn was at $5. If all else being equal, corn stays at $5, I'm going to lose 60 cents for that storage cost. That will be reflected in the futures price. What I should have done, being a paper trader, was bought the May 2022 corn contract. Okay. Right. And I don't have it in front of me. I shut my screen off so we could have the video be clear. But the proper thing is not to say I bought May corn in May of 2021 and a year from now say, well, heck, May corn today is $5 and it cost me $5.60. I lost 60 cents. That was a bad investment. Right. No, the proper thing to do is buy the May 2022 futures contract and just sit on it.
I want to be clear, that contango, that's a normal market.
That is correct. Normal is market. That's why backwardation, it's backwards. Okay. That's a backwards relationship. When a commodity is worth more today than it is in the future, that's upside down. That doesn't make any sense. Think about a grocer, okay? He buys a can of peas and puts it on the shelf. He has to lay his money out. He's got cost of money. He's got insurance. He's got all the costs associated with keeping that can of peas on the shelf till it sells. So he's got to mark it up a bit.
Yep.
If he marks it down and sells it at a discount, that makes no sense at all. That's a backwards thing. Same thing in commodities. It all makes sense like that.
And that's where we are now.
That's where we are now, and that's because it's perceived that there's not enough. Now, there is enough, okay? But everybody's nervous. What they're assuming is we're going to grow enough to get us back to normal in the future. So the prices in the future are lower today than today's actual price of the corn because people are afraid we're running pretty low.
Yeah. So then normally in a contango market, when you just roll forward, that's how you hedge yourself, but in this market that wouldn't work, right?
Okay, so let's say that. So if you're holding May contracts right now and they're about to expire, I'm going to sell those, and let's just say I'll buy next May's contract. All right, and let's say corn is $1 higher. I'm making these numbers up, but corn's $1 higher now than it is next May. I'm going to sell, say, $5 corn, and I'm going to buy $4 corn. Now, what does that mean? That means I'm going to buy 20% more corn. Okay, so that's why people say you want to buy a backwardated market. You want to buy an ETF when it's backwardated. Well, okay, in an up market, you do, because the corn I'm selling that I have to sell because I don't want to take delivery, I'm replacing it with cheaper corn. So I'm buying more. I have to put all that money to work. So I'm buying more corn. So suddenly the fund that you bought holds a lot more corn than it did before the roll. Well, that's wonderful. If corn prices keep going up, you own more corn, you're making more money. Right. But here's where it gets you. When the market starts going down, you lose more money. So, backwardation isn't the holy grail that people say it might be. It's really good to buy a fund when it's backwardated, but you got to be fast because when the market trends change, you actually own more of that commodity inside the fund, so you're going to lose more. That's one of the reasons we designed our fund to hold 3 contracts. We will underperform in both up and down markets because we don't own the spot, and we're owning those 3 different contracts. So if you're a buy and holder and you believe the whole complex is moving up, that's what our funds are probably best designed for, in that you're going to slowly go up as the whole corn complex goes up. And as the corn complex goes down, you're not going to go down as fast because you own out the curve and it's spread out.
Sal Gilbertie is the CEO of Teucrium Trading. Just fantastic stuff. We don't give this space a ton of love on this show, but it deserves it. It deserves more than it gets, and it's been in a hot market, as have all the commodities, to be frank. But Sal was just dropping a lot of knowledge on us, and we appreciate that. We'll definitely have you back, Sal. They've got a bunch of commodity ETFs. You've seen them on the screen: tags, corn, SOYB. Check it out there. Teucrium Trading. Sal Gilbertie, thank you so much for the time today. Appreciate it.
It's a pleasure. Had fun
stuff. I hope you all learned something, because I definitely learned like 10 things just there talking to Sal. So I hope you did as well. If you did learn something, give us a like on YouTube. We appreciate that. And if you want more commodity stuff, we can bring on more commodity guests. We can bring on some metals people. We can bring on more agricultural people. We can bring on anybody. Say the word, and we will try our best to get them on. So, yeah, again, Gerard says, great guest. Anne-Marie Van says, fantastic, and that makes me happy. Andre loved it. Hacks loved it. Yeah, Jason Chubnell says, we got to bring on Angie Setzer, a.k.a. the goddess of grain. We will get Angie Setzer. She's actually on I wrote her name down. She's on a piece of paper. I wrote her name down. It says Angie Setzer, PMP. So I will get Angie Setzer on the show soon. I promise. She, if you don't know her, she is a trader, commodities trader, and she's living in the space just like Sal is. And so it's from a little bit of a different perspective, but she's fantastic. Adam Reynolds is asking, when will we get Elon Musk? TBD on that one, Adam Reynolds. I don't know. I don't know. Sorry. Anybody besides him. All right, guys. Smash that like button. Programming note: today is the last, quote unquote, normal day of the week for Benzinga YouTube and streaming content. Reminder: we have the Benzinga, the Global Small Cap Conference tomorrow and Friday right here on YouTube. So we're going to do pre-market prep in the morning as we normally do, and then at 9. From 9 o'clock onward, it'll be the small cap event. So we'll do some like pre-recorded stuff, but no live stuff, no live SPACs, no live Power Hour, no live Get Technical, no live crypto show. It'll be just small cap conference for the next 2 days, and then when that ends at 6, we're going to resume our evening programming. So this is going to be the last normal day of the week on the programming front. And if you have no idea what I'm talking about, as far as the small cap event, well, learn something. So it's a 2-day event. It's free. It'll stream on YouTube. But if you go to bzsmallcap.com, there are some other things that aren't going to be available on YouTube, some exclusive stuff. So bzsmallcap.com to learn more about all those offerings. But that's going to be tomorrow and Friday. I am going to be moderating or emceeing one of the tracks, just 2 tracks each day. I'll be emceeing one of the tracks tomorrow. So check that out. Okay, wow, it is 9:25. See, time flies when you're having fun. I'm having fun. I don't know about you all. It's always fun to hang out with you fine people. Here is our programming schedule for the day up on the screen right now. David Green was supposed to be on with us today, but he had a last-minute cancellation.
Spencer, I don't think you saw, but Aaron said that he might be ready. I think he was setting up the link.
Really?
Yeah,
Oh.
just want to give you some insight on that.
I did not know that.
Before you tell everybody to get on out of here.
Man, all right. See that? I didn't even know that David Green, because he first he was, then he wasn't, and now he is. All right.
It's a little back and forth, but right now the last message that we have is Aaron Bryce saying going live.
He said they're going live right now. Then I'm gonna hop. Everyone, that's before I leave. Thank you very much, Mitch. Before I leave, did we get to 1,000 likes today? Please. Oh, we didn't. We're at 750. All right, 3/4. 3/4 of the way there. All right. Smash that like. Let's get to 1,000. Live trading with David Green starting right now. I'm going to hop off the stream, and I'll see you guys later for various other Benzinga shows. Good luck at the open, everyone.